All right, we also live on YouTube also. Okay. All right, very nice. Now we are back once again. So I welcome each and every one of you, whether you have been in the markets or whether you have not been in the markets. This video is for you. So just be patient. Relax 1 minute, breathe in and breathe out. All right, we are three. We are back. We are back once again, so we can continue from where we were. Now, yesterday we had a very clean pair, and this Euro USD pair is what I was telling you. I was trying to explain to you that this is the kind of setup where you go balls deep in, especially if you are around there. If you are around during that time, if you are around during that time, that will be a very good trade. So for today, you can see price. What? So for today, you can see that we are on a buy on Euro. All right, very nice. So I am on a buy position on Euro USD. Now that position, I will likely hold it the whole day now. I will hold that position the whole day. It was a late entry, but so I've taken today's Asian high, and today London's high. So between that, we get what we call a sweet. A sweet spot. Everybody say a sweet spot. So today's sweet spot is at that level. And that level also doubles up as an Asian low. So I'm in that trade. Let's see how it's going to play out. Let's see whether we are going to find more liquidity down here. But for this trade, I am not getting in. I'm not getting out. Now the other trade I am about to. So we have the next one is US that. So US30 seems like it wants to break our level here. So once it breaks our level, we'll have to wait for it to retest again, to go up again. Okay, but Thursdays and Fridays are good days, especially when you have had this kind of a market. They are good days to get into the market because now the fog is cleared. The only thing which remains is your patience as a trader. So there's something I wanted to explain before we even continue. Before we even proceed, very nice. You are 6 of you. Now that is what I like to see now. Now, away from the technicals, there is something very, 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 very important I wanted us to highlight. From where you are listening me from, it may not be necessarily Kenya. There are a lot of bad apples in the market. So this video or the algorithm should push this video to all the people who want to start trading the markets. Not only the 6 of you, but I appreciate the 6 of you, because if it was not for you, I will not be here talking to you. At least you are giving me some morale. But today's video, I want it to reach out to, for it to get to everyone in all the corners of Facebook, all the corners of YouTube. Now, this field, we have to separate the wheat from the chaff. The first thing we talk about is that we put statistics on the table. Number one, if you are a forex trader or you have been in the markets for quite some time, you know one thing. 95% of all the traders lose their money, and they will continue to lose their money until the day they die. But there are 5% of all traders who are consistent winners. Now remember, I'm not talking about affiliate marketers. Yes, affiliate marketing is very good, where I introduce you to the broker and then I get some commissions here and there. Here and there I get some commissions. But still, in the real trading, 95% of all traders lose their money and 5% of all traders are consistent winners. Now, why do these 95% lose their money? You'll be very surprised. It is not even an issue of money itself. It is not even an issue of money. That is the most surprising thing about these 95% of people losing their money. I'll give you an example with what I'm trained to do. So, I'm a trained cost engineer. So, what a cost engineer does, when the architect finishes drawing the house, so he'll give this house to a cost engineer or a QS, a quantity surveyor, and the cost engineer will find out how much this house will cost to build. So in retrospect, cost engineering is a very repetitive job. So I come here, I do this. I come here, I do this. I come here, I do this. Every day I repeat those things. Every day. So even when I'm angry, I can still do a cost engineering work. Even if I am sad, I'll still do that work. Because it is repetitive and I'm doing the same thing every day. Okay? Same for a teacher. If you are a teacher, it will get to a point in your teaching career where you will not need to go even with books in class, because you have already mastered the topics off head. You know what you should be saying. Even you can even tell the students, open page this and this, read this sentence. How did you know that? Because of doing it constantly. But now, trading is not like that. You can even be the best doctor or even the best economist, but you will not be a good trader. Why? Because trading is dealing with uncertainty. And when dealing with uncertainty, the only person you can trust is you and your behavior. And that is where 95% of people lose their money, because their behavior does not align with the market. What do I mean? What do I mean in simple terms? Number one, you have to be extremely emotionally mature. So emotional maturity is number one. Brethren, even if you have 1 billion, you have put it somewhere, that 1 billion will soon be 1 million, then it will be 1,000, then it will be 10 bob. 10 shillings, and there is nothing we shall do. Because remember, you obtained this money by doing repetitive tasks. Maybe you are an engineer, maybe you are a teacher, maybe you are a farmer. And all these things don't require emotional maturity. They don't. But when you come to the market, that is number one. And emotional maturity, the first lesson of emotional maturity is you as the trader understanding one thing and making it your identity. And what is this thing? What do you think is this thing that a trader has to have to say that they are emotionally mature? What is this thing? What is that thing? You can type it in the comment section. What do you think is that thing? What number one quality of can we say now you are emotionally mature? You can put it in the comment. Put it in the comment. And this single character, or this single character is why many traders will never ever make a single coin. This simple character is the reason why people are giving out their money to scammers. You give your money to a scammer, and then the scammer asks you. I was listening to another scammer yesterday on a podcast. That scammer was saying, before he takes anyone's money, he first asks the other person. He first tells the other person, do you know you can lose your money? Do you know it is possible that you're going to lose all your money? But the problem is, yes, you're telling them that way, but you're not giving them the full information. Now, no one is answering me that question. Answer me that question in the comment section. For you to be an emotionally mature trader, what character must you have? You must answer that question first before we continue. At least one answer. I must see one answer. For us to say you are emotionally mature as a trader, what is that character you must have? Answer me in the comment section. It is not money. Don't say money, because you can have 1 billion and lose it all. Hey. You can even have 20 million and you lose it in the next 2 minutes. So put it in the comment section right now. In the right type something there. This is the character you must have. Now Sharobis says, lack of greed and being able to think in probabilities and having no attachments to the money and understanding every trade outcome is in depth to the previous ones. Alright, now you have given me a lot of reasons. Bas, very nice. This is the answer I wanted. So the 6 of you, I want you to read what this guy called Don Garfield. This is a very serious trader. I wanted only one reason, and he has given me the exact reason. So if you are reading this, screenshot what that guy has typed there. You must be able to accept losses. You must be able to accept. If you have been in my live sessions, you have seen me take losses. They are not very nice. It is not very nice to take losses, but you have to accept that you'll make those losses whether you like it or you don't like it. You have to accept it. So once you accept that, now comes number 2. Number 2 is, once now you accept losses, now you structure your capital in such a way that you will never ever lose your capital. Alright? Now you can lose your capital in the first 1, 2, 3, 4, even maybe 5. Let us give you 5 years. You can even be blowing accounts in the first 1, 2, 3, 4, 5. But if in those 1, 2, 3, 4, 5 years, you have not learned something, the only thing you have not learned is that you are not accepting losses. Your ego is very high. You think that you are the only one who should not lose. So sometimes you don't even use a stop loss. Okay? Sometimes you even tell people that a stop loss is for women. That is very foolish. A very foolish statement coming from a person with an audience. A person has 250,000 followers, but that person in his foolishness is telling his followers that a stop loss is only used by women. So what he's trying to tell you is that a stop loss is only used by weak people. But you who is listening to me knows that a stop loss is what is going to make you never ever 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 lose your money, ever, and at the same time grow your money exponentially. So this is not a game we are playing here that we are risking. We are risking and seeing whether we are going to make it or no. I don't like that mentality. We are not risking anything. We are here to grow our money the correct way. Even if it takes 5 years, and we can grow $1,000 to $50,000 in 3 years. How many people in the world can do that? Not very many. But it is possible with trading, and you know that. You know that. If you have been trading for at least 3 years, you know that. You know that you can grow your money from 1,000 to 50,000 if you show up every day for only 2 hours or 3 hours or 4 hours. That is 2 hours in the morning and 2 hours in the evening. That is if you want to trade both sessions. You know. For example, this month has been very good, which has made me realize on my part I was also slacking. I was also being lazy because I was not always in the markets every day. But to be in the markets every day does not mean I'm trading every day. So this month, this is the first month I've seen exponential performance in my results. But the first lesson, remember my first lesson was accepting losses. That is a lesson which has taken me a long time to understand. I don't know why. Sometimes I used to understand it, then I start saying, okay. Next trade, I think I'm going to go in with all my money. Now, when you accept you're going to make losses, you start structuring your capital now. For example, now let me give you the practical example now. Once you accept you're going to make losses, now you can plan your way around that you'll never lose this account, because the only thing I don't believe in trading is that once you have a serious edge and you have accepted that you'll make losses. Now, what is born from that is you begin now to accept that you will never lose your account again. So if on $1,000 account, because on $1,000, if you know what you are doing, you can risk even 3%, 2 to 3%. Not on prop firms. So for those who don't know what prop firms are companies which give you money. You pay them, then they assess you, then they give you capital. So on prop firms, it is strictly 1%. In fact, for me, I like to use 0.5% because I'm here to make money. I'm not here to make to grow my I'm not here to show others I'm making money. I'm here to make money and put that money in my pocket. So when it comes to prop firms, that one I risk 0.5% or even 0.25. But we're not talking about prop firms here. We're talking about personal accounts. $1,000, $100. Okay, so with $1,000 now, we want to grow this account to around $20,000 by the end of the year. Is it possible? Very possible. But remember, number one lesson is, so when you accept you can make losses, you start structuring all your trades within this range, 2 to 3%. Now, if you tell me, so 3% of 1,000 is $30. Now, in the same breath or in the same reasoning, using the same reasoning, my dear viewers, using the same reasoning, you will be a madman, a foolish man, a gambler to lose 30 times 30 trades. How many trades are these? So let's say 34 trades, so that we can now exhaust our, so that we can blow, is equals to, let me do this. So this is 1020. So this is 1020. So we have 1020 as our capital. So it will take 34 trades, losing 34 trades in a row to completely blow our account. Now, if you have been trading for 1, 2, even 1 year, even a person who has never traded, who has never been in the markets, if you lose 34 trades in a row, if you lose 34 trades in a row, you deserve to be whipped. You deserve to be beaten. Because one, you don't know what you are doing. You are guessing. Let me repeat this again. If you lose 34, even trend, let me even reduce, so that now you can see why you are gambling and why you are losing your account. Let me now even reiterate now. If you lose 10 trades in a row, 10 trades, well, you can lose 10 trades in a row. But if you lose 10 trades in a row, there is something seriously you are doing wrong. But for the purposes or for the sake of this lesson, let us use 34 trades. Don't ever lose 34 trades in a row and then call yourself a forex trader. Now, we have moved from the issue of losing. Now we are entering now winning. So we have said, if you're in this group, now if you have $100, so $100 is not a lot of money. So if you have $100, it is possible for you to risk $5, 5 USD per trade. This is 5%, but now your account is very small, and there's nothing you can do about it. So 5 USD is the best. Again, if you lose 20 consecutive trades, you still deserve to be whipped. And I'm done with that. I'm totally done with that. So the real forex trading, you don't lose money. You cannot lose money in forex trading unless you want to. Now, using 1020, how would I plan? How do I plan for this 1020 to grow it to 20,000? The first is risking 3% of all my trades per day. So per day, I have a risk allowance of 3% per day. Per day. Even if I take 50 trades per day, it is $30. So in all my trades, when I give you my MT4, the only thing you expect to see in my MT4 are not profits. Of course profits are there, but the only thing I want you should expect is that per day I should never lose more than $30. So you risk $30 for something above. So this is now where the law of large numbers. So in short, forex trading works on the principle of the law of large numbers. How does it work on the law of large numbers? Remember, we have talked about 34 trades, 10 trades, but The law of large numbers is simply as it is said, the law of large numbers. So for you to say that you want to quit, or for you to say or for you to say you have a skill in the markets, you have to have put at least 100 trades. Why? Because forex trading works on three things. Number one is edge. Number two is risk. That is your ability to lose money. Remember, the best loser wins. Okay? Number four, we have psychology. And I told you your psychology is tied to these two. It is tied to your edge plus your risk. So in 100 trades, if you lose everything, if you lose all your money, it means you don't have an edge. Okay? Because edge is not just technical capabilities. Your edge is you as Don. Your edge is you as Sharbiz. Your experience, your understanding of the markets. For example, when you're in these live sessions, you are gaining experience every day. We are moving into a new world where all the fake gurus will be overshadowed by the serious traders. It is time for the 5% to start talking, because if the 5% don't start talking now, people will continue saying that forex trading is for scammers, for thieves, for charlatans. Whereas me and you know that the law of large numbers exists. So I want us to do something called, I want us to use AI. I want us to prompt AI. So to prompt AI is the language you have to learn as traders or anyone who uses AI. You prompt it or use prompt engineering. You talk to it and give it instructions. So I want us to give AI instructions of the possible outcome of our trade. Now, walk with me. Walk with me. Don't get bored. There's something I want us to understand, so that I show you how possible it is. I'll feed AI the mathematical part of my edge. Okay. Assume. Alright, no, not assume. I have 1,000 USD. Okay. In my trading, I have a win rate of 50%. Yes, trading Cyborg has a win rate of 50%, whether you believe it or not. That is so for 100 trades, I lose 50. Imagine, and that is still a very high win rate, by the way. If you don't know, a 50% win rate is very high. So in my trading, I have a win rate of 50%. I also have a risk to reward of 1:2. So that is the main one. But remember, sometimes I get 1:5, I have 1:8, I have 1:6, sometimes it's 1:1. But when you do the mean, it gets to 1:2. So for every dollar I risk, I get $2. But sometimes, like yesterday, you saw, I risked 20 pips and I got 75 pips. That was 1:4 or 1:3.8. So that is 1:4. Now, up to what point does everyone understand me? So I have $1,000, and in my trading, I have a win rate of 50%. I also have a risk to reward of 1:2. Out of 100 trades, I will lose 50 trades. So that now you know where my confidence comes from, okay, and why my fear evaporates. Out of 100, I will lose 50 trades. Of the 50 trades remaining, %, are 1:2 trades, and 15% are 1:4, 1:5, and then 10% of trades. No, how many percent? So 45. So 45. So 5. So 70. Sorry for that. So 70% of all my trades are 1:2 trades, and 15% are 1:4. So we are around 15, and 15%. So work with me. Don't get tired. Don't get tired, please. I want to show you how mathematically, how I increase my confidence on a mathematical level. So 70% are 1:2 trades, 15% are 1:2, 1:4, 1:5, 1:6, and the other 15% are 1:1 trades. Now, I will also add something which you hear me. I also cut out losers which don't give me profits in %, in 30 minutes, and this saves me around 50% of the time, because sometimes I may get out early, and then profits, and then price continues in my direction, okay. But the other 50% of the time, when I cut out that bad trade which is wasting my time, it usually proves a very good decision. Okay? Now, assuming I take okay, not assuming. So from this information, calculate the growth of my account over time. And continuously add risk when the capital is doubled. E.g., my risk is that USD per trade in 1000 USD. When it gets to 2000, increase it. Break down step by step the growth of these, because you must understand where you are going as a trader of this account over time. All right. And the moment this thing clicks in your mind, it will never unclick again. And that is why you have to understand one thing. Hedge funds are the richest, are some of the rich, in fact they are the richest. When you look at the top 100 billionaires, almost many of them are hedge funds. A lot of them are hedge fund managers. Why? Because of this exponentiality. Once you understand how the game is played, from that point onwards, you just grow your capital exponentially over time. It is taking quite some time because it has to break down. It is doing data analysis. So when AI is doing data analysis, and this is the same formula we are using here. So dear trader, understand one thing. We are not dealing with guesswork here. We are not dealing with we are not coming here to say that no risk, no Ferrari. That's a very foolish statement. That is a statement you'll never hear me saying in my live session. You cannot hear me saying that. You will never hear me telling you that no risk, no Ferrari. Because no risk, no Ferrari means I'm telling you to risk everything in your capital. And even if you have a lot of money, it is very painful to lose all your money at once. So we shall come here to number 7. So growth timeline, trade based, not emotional. This is where we are now. So over time, I will start to risk I will be using $30 risk. When I get to 2,000, I will use $60. When I get to 4,000, I will be risking $120. When I get to $80,000, I'll be using $240 as risk. Oh, so by the time I get to 39 trades, I'll be at $2,000. Yes, that is what I had not understood. So it will take me a total of 39 trades, both wins and both losses, to get to $2,000. After which I will start risking $60. So from 2,000 to 4,000, it will take me another 78 trades, another 39 trades, and from 4,000 to 8,000, it will take me around another 39 trades also. But remember, as I told you, once you have recouped your $1,000, now it can even take the next 2 or 3 months if you are serious enough. But you have to get to that point where you earn that right to trade bigger. Because when you get to a point where you are risking $480 per trade, that's a good. Now we are talking now. Okay? So for anyone out there, whether it is your friends, whether it is your father, whether it is your mother, even the scammers, sometimes I think the scammers don't know this information. That is why they are trying to lure as many people as possible. Because even people themselves want to make money the easy way. They want money tomorrow. They want money as soon as yesterday. As soon as yesterday. But remember, your money only starts compounding after 30 plus trades. So if you are here and you are listening to me, this is the only way to go. Growing your account over time and being patient with the process. There is no any other way. This single trade here netted us 80 pips, 86 pips. But I managed to take around 75. Now, if 75 pips is not a lot of pips for you, then I don't know what you are doing in these markets. 75 pips is a lot of money. So someone on it's called Moyo. Moyo is asking, I have $100. Must I buy a prop account or fund a broker? Fund a broker. You don't even have to fund the broker I'm telling you to fund. Fund another broker. Fund, then for each trade, risk 5 USD, then grow that money exponentially. When it gets to $1,000, now you can think of prop firms, because prop firms are much harder than, I don't know, have I lost network? Alright, you can hear me loud and clear. So this trader was asking a very simple question. I have $100. Must I buy a prop firm or fund a broker? And I told them to categorically fund that account into a broker. Once you fund that account inside a broker, now that is where your journey starts. Your journey to a prop firm, So number one, the first step, if you have $100, from 100 to 1,000, that is the first step. The second step, from 1,000 to 2,000. Once you get to 2,000, remove 1,000, or withdraw, not remove. Remove is a direct translation. Withdraw $1,000. Now, once you withdraw $1,000, that first $1,000 is now to tell everyone, fuck off. In short, that $1,000 is your rent and your food for the next 1 year or 2 years, depending on where you live. If you live in one bedroom, in a one bedroom house where you pay $100 or $50, you have put money for the next 1 year. So 50. So the goal, this is the goal I'm telling you. This is the path. 100 to 1,000 to 2,000. When you get to 2,000, you withdraw 1,000 USD. This 1,000 USD has to cater for something, either rent and food for 6 months, because where I come from, $1,000 is enough for rent and food for 6 months. So the next $1,000, now that is where you decide for yourself as a man or as a trader or as a woman trader, based on your finances. With this other $1,000, because you'll be trading from a place of abundance at that point, where you can be able to afford your rent and food. You're playing the game at a higher level. Okay? So this other 1,000 USD is what you are going to now do to grow it to even 3,000 to 4,000 USD. Now, when you have 4,000 USD in total profits, it is very possible for you now to get into prop firms, because prop firms are a different beast. I'm not discouraging you, by the way, but prop firms are a different beast. And to get to that beast, of course, you'll get there in the long run. In the long run, you'll get to where you want. But you have to prove yourself first capable. If you're not capable of growing your small account discipline-wise to $1,000, $2,000, then even the prop firm is going to take a hit on you in ways you never imagined. So with $4,000, it is easy now to risk even 2000 USD on prop firms. That's around 5 challenges of 500 USD each. So it is good to think about the moon. Is it the moon? Or we say we target the moon so that we can land on the sky. I'm not sure how that saying goes. But we target the moon so that we can land on the sky. So your first target is not even prop firms, by the way. Your first target is not even rented food for 6 months. Your first target is not even $2,000, my friend. Your first target is 100 to 500. In fact, let me even make it smaller. 200, then 500. In fact, let me even so your first target as a trader is from 100 to 200. Imagine, very easy target, very simple target. Easy, simple target. 100 to 200 in a span of 2 months. Give yourself 2 months or 3 months. Simply, slowly, no stress. No stress. If you are risking $3 to $5 every month, if you are risking $3 on 100 USD account, you are going to take at least 30 trades to get 200. 30 trades, we take 30 trades in a span of 2 months. Do you know that? So in 2 months, if you have 100 USD, it should be 200 USD. So I'm showing you the right way to grow your account on the forex market. And we started this live session by first disputing that people don't make money in the forex markets. Why? Because those who say that people are not making money from the markets, they don't understand the markets. But for us who are knowledgeable on the markets, we know we are operating on the law of large numbers. And similarly, we said that once you start following your risk management and then you lose your money, still you don't know what you are doing. So there cannot be a good risk. You cannot be a good risk manager if you don't know your technicals. Simple, clear, straight to the point. So technicals align with psychology and they align with risk management. Without any of those 3 legs, you are hanging yourself. So if you're in this live session, your number 1 goal this year is to, or in this first quarter, is it first quarter? Yes, in this first quarter, is to take your 100 USD to 200 USD through daily analysis. And daily analysis is here on this channel, free. How do I benefit? I'm growing my YouTube channel. You can see I'm growing my YouTube channel. So I'm also benefiting. Number 2, I am also very focused, because if I know I'm responsible for 2 hours, for only 2 hours of a live session, I'll be in that live session whether I am sick or not. Even if I'm getting drip medicine in the hospital, I'm getting blood transfusion, I have to hold my phone with the other hand as I get transfused, as blood is being transfused inside me. I'm holding the phone in my other hand, live streaming for you and looking for opportunities. Simply because if you have the energy, do it when you are young. If you don't do it when you are young, you'll never do it again. And doing it when you are young does not mean you do it foolishly. You do it in the best way possible so that the ones who are talking, so that the fools, in the long run, even the scammers will be eliminated from the markets. So even if it takes 1 year, 2 years, 10 years, 15 years, all the scammers you see, or all the people who are showing the flashy images will have to be removed from the markets, and we are going to be left with only serious traders growing your capital exponentially, slowly, confidently, taking losses graciously. Okay, so today we have digressed a bit from the technical analysis, simply because I'm in a Euro USD trade, and I've decided that trade I'm going to wait for it, because we are continuing with our buy what, whatever it is called, our buy signal up to this point. And the good thing about these forex markets is that once you start winning, simply put, if you are able to turn your 100 to 200 USD, the psychological level someone, you jump the next psychological level now. Now the next psychological level, you'll have to the next psychological level, if you get after you get to 200, you have to start now adding to your winners. So dear traders, you have to understand one thing. The only hard part is this hard part where you are starting. You see this hard part? You see this $100, $1,000, $10,000? That is the only hardest part. Trust me, you. Once you get to 200, once you double that account, now you step into a new psychological perspective where you are able to add to your winners. What do I mean? If I am risking $30, if I get to $2,000, now I will not only risk $60 per trade, but once I get a good trade, I have to go balls deep in. So that means I can add another $60 on top of that trade, or another $30. Simply to put it, I'm now in the stage where I'm not only growing my account, but I'm adding to my winners exponentially and cutting my losers ruthlessly. December we shall be here with results. You will see. You will be here and will witness. December we are coming back with results. So chin up. This market belongs to serious traders. I believe the three of you, the one person who is here now, right now, on this live show. We have one concurrent viewer. We have one viewer. His name is Moyo. Moyo means heart. So we have, how many people do we have here? We have 5 people here on Facebook, and we have one other person on YouTube live stream. So on December date 20th, 25 that year, we shall be here with results. All of us. Because for us, we are not here to lose money. We are here to make money. And how do we make money? Growing our accounts using risk management. And what do we do with risk? So you being here is not all in vain. I know this group is not meant to attract a lot of traders. Serious trading does not attract a lot of traders because it is boring, there's no excitement, and you have to take accountability of your mistakes daily. There's no shortcuts. Otherwise, you will never ever grow. Ever. Ever, 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 ever. You will never ever grow. Okay? So at 4 p.m., we'll be back here again for more opportunities. Okay? And our live sessions will be beginning from 10 a.m. to 12 a.m. 12 p.m. That is the London sessions. 10 a.m. to 12 p.m. noon or 12 noon. Alright? If you want mentorship from me, you can still contact me. So when you see people being referred to as scammers online, yes, they are scammers because they are not telling their listeners that trading is a long game. You have to be patient. You have to wake up every day and do the same things. You have to consciously manage your risk. You have to plan around you. It is a lot of decisions. So what these scammers do, they go straight to the meat. They tell people we are going to make money, but they don't tell people the rules of engagement. Now when people lose money, these same people are too egotistical. They are too angry to try, and even they cannot even explain to take ownership of the mistakes, because taking ownership of the mistakes means that you also need to change your habit. You need to start telling people the right thing. Okay? So if you are here, understand that 1 to 200 USD we shall take at least 3 months or 2 months. Okay? And there is no limit to where you can go once you start compounding. So chin up. Let's meet in the next session. And if you have a question, you can always come to my inbox and I'm going to answer you the best way I can. Okay? If you want a Zoom session, you can ask me for a Zoom session. We can plan around it. Alright? Yes, but remember, not everyone is a thief. Or not everyone is afraid to tell you the real thing about forex trading. Not everyone is afraid. It is better to live in a painful truth than to live in a very comfortable lie. We are going to win. We are just going to win slowly, much slower than the gamblers. Because once the gamblers put $100, within one day it is either 200 or 0. So Jack Cliff, yes, the time is from 10 a.m. to 12 p.m. I was doing a mistake. I was coming at around 9 a.m. But 9 a.m. I realized we are still in the I realized 10 a.m. is still in the daylight savings mode. And in the daylight savings mode, we have to push our time session or a time zone +1. So right now when you put on a trade, right now it is 12:18 p.m. But when you put on a trade right now, a small trade, maybe of 0.01, it will read 11:18 a.m. because we are still in the daylight savings mode. So I hope this lesson, well, you may understand that you may have an understanding of the market mechanics and how long it takes to be consistent and to make money in this market. But sometimes not everyone knows what you know, and you need to be patient with other human beings because they are also people like you. They also don't know what is happening. Okay? Remember, forex trading is a new phenomenon in Africa because most of my audience is from Africa. Forex trading is a new phenomenon from Africa, and as Africans, we need one serious person who is going to show other Africans how to build wealth in a concrete way, in a way where you don't lose your money. I told you the first lesson is you should never lose your money. Maybe in the first few years you can lose your money, but after 5 years you should never lose your money. And before that, even if, and those for 5 years are the traders who have self-taught. But if you have a mentor, a serious mentor, they will tell you from day one, you should not ever lose your money in forex trading. That is why I discourage anyone to trade with below $100. If you have less than $100, take that money out and eat it. Start from $100 at least. Then start your business slowly. God will bless you along the way. He'll bless your discipline. Okay? So if you're in this session right now, if you have been trading for some time and you think that trading is you have to get that money tomorrow, I have to promise you of what do I call it? Of recovery. I will not do that. We trade each day as it comes. For example, yesterday we got a trade in there during FOMC. I am not the one who told the market to come to this level. I never knew. I just analyzed based on the information I have, and then price came and took me and carried me away, or it gave me what I wanted. Okay? So these live sessions will change you for the better, and that is what I am hoping. That by deck, you will not only be mentally okay, you will not only be mentally okay, but financially, you also have some coins in your pocket. Some coins. Now the final thing, I want to answer this person, Moyo again, is asking, how big of an ego do I need as a trader? You don't need any ego. You should not have any ego in the markets. Zero ego. And zero ego means you accept when you are wrong. You don't try to push your stop loss. That is the only ego you need as a trader. To accept when you are wrong. And to get out very fast and not waste any time. But you learn that over time. So be patient with yourself. We are on the right track. All of us who are in this live session are on the right track. Over time, we shall get more serious people, maybe 1,000 or even 5,000 on our live sessions. But for a beginner, for a starter, we are just 6 serious traders, and that is what I wanted. Okay? So thank you for your time. Let's meet at 4 p.m. But I will inform you.